Why are stock markets acting so strange lately? If you've been following the markets recently, you might be scratching your head as you watch the Dow Jones, S&P 500, and Nasdaq behaving in rather unpredictable ways. The Dow Jones seems to be selling off, losing over 1% of its value. Meanwhile, the S&P 500 is down by nearly 0.5%, and the Nasdaq is surging, gaining almost 48 to 49 basis points in a single day. On top of this, the 10-year yield is hovering just above 4.92%. If you're between the ages of 25 and 48 and are interested in stock market news and content, you might be wondering why these fluctuations are happening. Well, that's what we're here to explore. Before we dive deeper into the situation, I'd like to invite everyday Americans to share their thoughts in the comments below. We want to hear your opinions and insights on what's going on in the stock market. Your perspectives are invaluable in understanding the broader picture. The most recent PCE, personal consumption expenditures, numbers are an interesting point to consider. In September, the PCE price index rose by 4%, which exceeded the consensus of 3%. The market doesn't seem to be reacting strongly to this news, but the real test is coming up next week. We have the Federal Reserve's meeting on November 1st, where they'll make important decisions about interest rates. This meeting coincides with the release of the job report, as it falls on the first Friday of November. At this point, you might be wondering about the consensus regarding the Fed's actions. The expectation is that the Federal Reserve will maintain the current interest rates, ranging from 5.25% to 5.5%. Furthermore, the market anticipates 3 rate cuts in 2024, starting in June. But, there's a catch. The market's expectations and the Federal Reserve's actions often diverge significantly. This can work both ways, and it's something we should keep in mind. Before we go any further, let's take a real-life example. Consider the interest rates on credit cards. The average credit card rate is now above 20%, an all-time high. This is significant, especially when coupled with the fact that credit card debt in the United States has surpassed $1 trillion. It's not just the amount of debt, but also the rates being charged on that debt, which is reaching unprecedented levels. Moreover, mortgage rates are also on the rise, with 15-year and 30-year mortgage rates tied to Treasury yields exceeding 7 to 8%. This is the highest rate we've seen in over 23 years. It's clear that interest rates are a crucial factor in the financial landscape. The U.S. GDP continues to grow, with a 4.9% increase in consumer sentiment and strong retail sales. This growth is significant, but it carries a dual nature. On one hand, a 4.9% growth rate in such a large economy is remarkable. On the other hand, this strong performance could provide justification for the Federal Reserve to raise interest rates further to combat inflation. In essence, the Federal Reserve might penalize a robust economy by tightening monetary policy. Now, let's talk about recent market performance. Meta Platforms is showing signs of rebounding, gaining almost 3%. Amazon also saw an upswing in its stock price following positive earnings. However, other sectors like healthcare, energy, and financials experienced notable declines, along with utilities. Basic materials, industrials, and consumer defensives also faced downward pressure. On the flip side, technology, communication services, and cyclicals exhibited strength. It's time to hear from our readers again. What are your thoughts on the recent market fluctuations? Share your comments below. Over the past week, only the utilities sector has shown signs of improvement. All other sectors have witnessed declines. Commodities like soybeans, gasoline, crude oil, volatility, canola, copper, and more have seen fluctuations. The Dow Jones, Russell, natural gas, wheat prices, and cryptocurrencies like Bitcoin and Ethereum have had their own share of ups and downs. The technical analysis paints a mixed picture. The S&P 500 appears to be weakening, with the next significant support level around 4,000. However, remember that the market can be highly unpredictable, and anything is possible. A 12% drop from recent highs to 4,000, which seemed unlikely at some point, is now within the realm of possibility. Apple, too, has been struggling, but it's showing signs of upward movement. On the flip side, Tesla continues to look weak, with the potential to drop further, perhaps even into the 150s. Meanwhile, Amazon, despite its recent gains, is trading in a downtrending channel. As for Meta Platforms, its stock price has been consolidating since July, and the overall market's performance is heavily influenced by the trajectory of 10-year Treasury yields. When yields rise, tech stocks and innovation companies tend to struggle, and that's exactly what we've been witnessing. The broader stock market, including the Nasdaq, has been on a roller coaster ride since July, with most stocks experiencing declines. Higher Treasury yields have put immense pressure on valuations and hindered market momentum. PayPal, Visa, Netflix, Google, Microsoft, and Enphase are among the companies that have seen their stock prices slide in recent months. PayPal, for instance, has witnessed a 33 to 34% drop since July. In conclusion, the stock market is in a state of flux, with various factors at play. The Federal Reserve's upcoming decisions and the trajectory of interest rates will play a significant role in shaping the market's future. It's important to stay vigilant and adaptable in these times of uncertainty. Let's continue the discussion in the comments below. What do you think the future holds for the stock market? Share your insights and opinions. Disclaimer: this content is for informational purposes only and should not be considered as financial advice. It is essential to do your research and consult with financial experts before making investment decisions.
Before you go, help us by smashing that YouTube like button. And subscribe to this channel, so you won't miss any of our videos. This shows YouTube algorithm that you value our information, and it helps us spread the message. Sharing is caring.